us how your company has changed as a result of the pandemic and the fact that Americans are stocking up now on groceries and pharmaceuticals. What are you seeing?
Yeah, well, good afternoon. Thank you so much for having me here today. You know, given the global nature of our company and the fact that we operate on multiple continents around the world, we've really been into helping our customers of all sizes manage through supply chain continuity planning since the onset of this at the beginning of the year. And so, you know, we tend to look at the progress that we've seen of this global pandemic across Asia, Europe, and now into North America. And we've seen a different story unfold really in each case. When we think about Asia, and, you know, the start where this happened during the Lunar New Year, we saw delays in manufacturing there, which certainly displaced the ocean freight industry. You know, we saw actually more canceled sailings in the ocean freight industry due to this pandemic than we did with all of the tariffs actually leading up to it, to put it in perspective. You know, within Europe, we saw a peak in demand of essential goods a couple of weeks ago, and now things as more and more Europeans are sheltering in place, we've started to see, you know, things really stabilize and decelerate in Europe. In North America, and particularly in the U.S., we see that supply chain changing really hour to hour and day to day. You know, there's a chart that I think we have that, you know, really depicts on kind of the changes in the U.S. marketplace that we've seen over the course of the last few weeks. You know, there's a chart that indicates the kind of the steady state of what we would expect this time of year in terms of the balance of supply and demand and pricing kind of towards the end of February. And what we saw the week of March 15th was really an uptick in demand in the trucking industry in the U.S. And talking to many of the largest retailers in the world, I heard them describe this as holiday-like sales, although across many different categories. We saw pricing increase, and we also saw, you know, across the nation, increase in trucking demand into areas that, you know, seem to be hardest hit by the virus. As time has progressed here, we've seen things decelerate a little bit, but certainly seeing continued increases in demand in some industries like food and beverage and grocery, but then offset, of course, in other industries like food service and automotive and oil and gas, et cetera.
Bob, logistics, I guess, is as important an industry as there is right now, right up there near the top of the list. How are your frontline employees holding up, and what are you doing to support them?
Yeah, you know, at the center of all of this really is an effective supply chain, and I couldn't be more proud of our frontline employees. Today, C.H. Robinson has over 15,000 employees across the globe. You know, at the beginning of January, we put in place our continuity plans and started at that point to deploy people from working remotely. Today, about 90% of our staff today is working remotely across the U.S. and Europe, as well as the rest of North America and South America, whilst our employees in China are starting to find their way back into the office and into our facilities. We've been active in terms of supporting our employees, ensuring that they get paid during the course of this crisis, whether they're able to work or not, and also taking extra precautions to ensure that our people are safe and healthy to the best of our ability.
Hey, Bob, this is Frank Holland at CNBC headquarters. You know, trucking is definitely a leading indicator. Can you give us a sense of the demand that you're seeing for things like refrigerated trucking with your Robinson Fresh business, and also demand for dry goods that come in like sanitizer and toilet paper? What are you hearing from your customers?
Yeah, it's across the industries. You know, if I look at retail as an example, you know, food retail, we saw increases in demand of 30 to 40% over the course of the last couple of weeks. And the same can be said with things like food and beverage, the things that go onto the shelves at those retailers. Likewise, large increases to 15 to 20% in things like, you know, healthcare goods and anything that's involved with technology and working from home. So on the fresh side, on the temperature-controlled side, it's another great call-out in the fact that we have seen dramatic increases for fresh fruits and vegetables where they're available, as well as displacements in supply chains where you've got, you know, food retail, which accounts for about half of the food dollar, increasing rapidly. You've got the other half of the food dollar in the food service really, you know, shutting down. So we've worked hard to bring those two industries closer together so that food service resources can help to support the distribution of retail grocery to where people need it the most.
Bob, is lower oil prices and also, I guess, lower traffic in general, whether it's in the roads or in the air or on the sea, is that helping offset any falls in demands you're seeing?
Well, there's no question that lower oil prices are helping fuel costs. But, right now with more of the country and more of the world, frankly, going into these shelter-in-place environments, what you see is trucking markets start to get displaced. And so the natural rhythm of taking freight inbound to a marketplace and then outbound from a marketplace, the outbound just isn't there as small businesses and manufacturers are shutting down. So while the operating costs may be positively impacted by oil prices, trucking is really an industry built out of small businesses. We've got over 250,000 trucking companies in the U.S. alone, with the average fleet size of 5 or 6 trucks. And so the networks are becoming more inefficient, which is where Robinson tries to step in, both with our technology to optimize the yield of these carriers, as well as taking additional steps to our carriers to offer them access to cheaper diesel fuel through our Carrier Advantage program. Any of our contract carriers can reduce their fuel costs by an additional 30 cents a mile, which is really helping to offset some of the inefficiencies in the network.